Welcome to today's call. My name is Dr. Harry Benjamin. I'm streaming to you from Houston, Texas, by way of planet Earth. Very grateful, very excited to be on the line with you all. And welcome if you're watching this as a delayed broadcast or you're live with us. My experience here started off in Jamaica, became a medical doctor professionally, then got into the network marketing, the automobile space right after medical school, basically. My wife and I did very well. And then we did some real estate investments in 2008, where there was a big mortgage crash in 2008, and it cleaned us out. We got back on our feet through the network marketing industry. And 3 years ago, we got into this community, Xtream Global Academy, or Xtream Lifestyle is the name of it now, where we are able to take advantage of the $7.2 trillion per day market for education. We're able to get health and wellness products, and we're also able to benefit from a travel online wholesale booking website. So I started off my journey with Xtream as an affiliate, where I paid a little bit over $100 to get enrolled. And after doing that, I was able to start marketing the company to people and earn bonuses and commissions. By joining with $168, you could join with $168 or $249 or $299. And then you could market our company to people and earn $500 a month, $1,000, $2,500, and so forth. So the compensation for marketing is very attractive. And in addition to that, like I did, you could then go on and get access to the education. You could do that up front from the very beginning, start learning how to trade, watch the videos, go to the library, and take advantage of this, right? $89 a month for the young entrepreneurs, $99 a month for a student, and $159 per month for Forex binary. And then you could buy the safety trade system, which is only $599 for the year, $75 per month. And this will give you access to a powerful system that has reduced the learning curve for traders. So for those of us who are either new to trading or already have some level of trading experience, what this system does, it speeds up the rate at which you could earn money. So let's look at NAS 100 today. All right, NAS is a really nice asset to look at. And even just a while, even just this few minutes, because we're on what's called a 1 minute chart. If you look in the watermark here, you'll see NAS 100, 1 minute, one is 1 minute. And you'll see clearly right here, right? Swazel and Cheryl, can you see that green, red, green, right? Two of them back to back. All right. And that 1 minute NAS, this 1 minute NAS already produced, well, it's back down to here, but it went up to, if you took it somewhere up here, that's 27 points, right? And this took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes. So in 12 minutes, you could have traded $10 per point on this 1 minute trade and literally made $270. All right? It's 41 points. So that's $410, okay, that you could have made from this trade. And this just happened in 12 minutes, last 12, 15 minutes ago. I saw when this was developed. So this is super powerful. Not to mention, what if you caught it? What if you were trading and you're watching what's going on, you saw this sideways move, and you caught this buy here, right? Because this was another buy here, and you caught it here. This was 76 points. 76 points. If you took it from right here, right?
May I ask a question?
Sure.
Realistically, if we started where you said hypothetically, down close to the green arrow there.
Right here.
Yes. Ideally, what is the size of the account that would have taken us all the way up to the top there?
All right. So let's say you had a $100 account. Right? You shouldn't trade NAS with $100. You shouldn't. Yeah. But the most brokers will allow you to trade NAS with $100. Ideally, you'd want to have, let's say, $1,000 in your account, right?
Yeah.
So if you had $1,000 in your account, then you'd have been able to trade $1 per point. That's the safest trade you could take, or maybe $2 per point, or $3. right? If
Okay.
you did $3 per point, this should have given you $210, $215 in just the last few minutes. This
Yes.
the
Yes.
time here is what time is that? The time here when this trade would have activated is 2:27,
Do
27 minutes
something.
past
Yeah.
2, right? So this is really sweet. Now here's the great thing. For those who may have larger accounts, let me go to the 4-hour chart. Let me show you something sweet. Four
I love that.
4-hour chart. Let's look at the 4-hour chart, right? So what is this right here, guys? Green, red, green. What is
Red,
this right here?
a gap.
Yeah, yeah. What is it? What type of trade is this? Green at the bottom, red here, green here.
Up by.
And this is the 4-hour chart. So each of these candles is 4 hours. Now, which date did this activate? Let's see which date was this set up.
Date.
So set up on January 24th.
Oh, January 24th. Yeah.
All right. Sorry,
Is that
Wednesday the 17th. Wednesday
January
the 17th.
17th?
Sorry,
Yeah.
Wednesday the 17th of January, 2020. Okay. And this happened at 5 p.m. Or a little bit before 5 p.m. Right? Yeah. Yeah. In the evening. Right. So this started off in the evening. Right. So this took place on during the evening session. Right. And then it went into the following day. Okay. All right. All right. So it started off in the evening, went into the morning. Right. This development here. So let's say you were trading this properly. You know, these 4-hour trades are some of the best ones. They are not often. We don't get them often, but when they do happen, they're very powerful, right? Because this when it comes below the 4-hour channel, you could see one is here, another one is here when it came way down below, right? If you come over here, you'd see down here again. So you see they're not very common. There's another one up here, right? So when we get them, they are very, very, very powerful. So let's look at see how many points this one delivered, right? There's one lady who in the group who caught it, all right? Let's see how many points is that. Read the number to the left for me at the top of this blue box.
717.
Correct. So if you're trading this with a $1,000 account, and you traded the smallest lot size, which is 0.01, which is $1 per point, right? You know, and the pullback on this, right? The pullback on this went to $161. So if you had put in this trade, let's say here, and it pulled back a bit on you before it went into profit, okay? This is $87 if it's 0.01 lot size per a dollar per point. So 717 points times a dollar is how much?
$717.
Yeah. So that's 71% gain on a $1,000 account between the 17th of January to when it peaked up here, which is the 22nd. So that's 5 days, basically a week. All right. So that is humongous. If you traded $2 per point, it means that you'd have, or $3 per point, you'd have doubled your account.
That's right.
All right. $3 per point would be $2,100. You'd have doubled your account. So the key thing is the patience to wait for this trade to develop. Now, there are going to be other ones like this because here's the channel. This is the 4-hour channel. So all you're waiting for is for the movement of the market to take it down somewhere below here in the future. Okay, and then that's so you look out for that. I mean, obviously these don't happen every. Say that again.
That's the indication that it is going to go give another one of these sweet runs.
Yeah. So once you get them below the channel, once they come below the 4-hour channel, you man, you're in the runnings. Let's go to the daily chart. You see the daily chart when it comes below into the daily channel. Look at this. Right? It's not even a full. Down here is where we got the full setup, green, red, and the broken back. Right down here. So if you caught this on the daily down here and come up to here, read out how many
Wow.
points that is.
Oh my God. 3,031.
Right. So 3,031 times, even if it's $1 per point, and
Yeah.
you had a $1,000 account, you could see that you could earn $3,000 on your money. This started off October 2023. It
Mm-hmm.
doesn't come into the daily channel that often. But here's another one in the daily channel, right? You could have caught this one, right?
Yeah.
And this one ran up 1,094 points.
My
And this
God.
one started on January 10, right?
And what if you had $10 on it? Hmm.
Now you're talking, Sharon. No, we're talking, right? No, $10
Mhm.
on it. So here's what we have to, we should do. As we go forward, we can take these other smaller 1 minute, 5 minute, 15-minute trades, right? And make
Mhm.
money, of course. But what we should be doing is building up a trading account so that we can put a trade, because these trades take a while to develop. They're not, these are not hours that you're going to make the money. These are days, weeks, sometimes months, right?
Mhm.
That you'd have to wait. Look at this one here, right down here,
Wow.
right? You can see that this one delivered. Let's look to see how much it delivered all the way up here. 5,900 and 5,513 points.
At $10. Ha.
All right. 5,500, that's $55,000. If you trade
Yeah.
$100 per point, that's a half a million. So what's
Just
gonna
so.
happen?
Just so.
Right, right. So we are gonna do that throughout the course of the year, because we're
Oh,
we're
yeah.
just right now in January. And if you look back at last year, if we look back at last year, we could see that there were many opportunities to take advantage of this is the daily chart. Let's go to the
Mhm.
weekly. Let's go to the weekly. And then we could look at a full year. All right. So if we look at the weekly chart, right, we're looking at a weekly chart. So each of these candles is a full week. You can
Mhm.
see January 2023 began down here. Right. So the market has sold down in 2022. Okay.
Mhm.
Sold down, sold down, sold down, and it caught a bottom here. And then all of 2023 was a rise. All of 2023 was a rise.
Okay.
So anybody who took advantage of this bottom made, this is 6,472 points over the last 12 months.
Mm.
So if you have an account that, can sit for a year, man, this is a wealth building machine, right?
Yes. And I
So
still say, if you're going to wait the year, I would imagine then that your account would have to have a few zeros in it to accommodate that.
yes, because you have to give room for
For
here's
the
here's the
pullback.
great thing. Yeah, but
Yeah.
here's the great thing about pullback. How you work this is this. You're gonna risk a certain amount. So let's say, once it's below these channels, the chances of it going deeper down is low,
Mm-hmm.
right? Because this is a weekly channel, right? So when it's down in these channels, the chances of it going further down is low.
Mm-hmm.
Now, when you put in a position, you're put in a position with a certain amount that you're going to risk. So you're going to put your risk, and you're not going to put it in um, when it's pushing down. You're going to put it in when it's already starting to reverse. So when
Okay.
it's
Mm-hmm.
reversing, you would have seen a reversal here, like right
Uh-huh.
here.
Uh-huh.
Now, so if you're putting in your trade down here, let's say you're putting in your trade down here, you're gonna
Mm-hmm.
risk, you're gonna be risking from here to the reversal, right, which is 299 points, right?
Mm-hmm.
You'd be risking that as your stop loss.
Mm-hmm.
You understand? So you'd be
Yes.
saying, okay, you know what? I'm gonna risk $300 or $600 or whatever the case might be, with the intention that's gonna continue to go up. Now, here's the beautiful thing though. Once it starts to go up, you can start to lock in profits, right? So let's change this to green. So once it starts pushing up, like this candle went up, you could like
Mm-hmm.
put this stop profit halfway the candle.
Mm-hmm.
So if it turns back on you, you just make the profit between here and here.
Okay.
So when it comes up to here, when it's up here, right, you notice there was a pullback to here. So you
Yes.
don't want to put this all the way up here because it would tap you out. You want to stay about halfway between where it is
Yeah.
and where you started,
Okay.
right, with your stop profit. Now, once you got a reversal here, which we did, then you can go, when it comes up again and gives you the next reversal, you can move your stop profit up close to the reversal.
Halfway again.
Right, right. You see, so you put your stop profit below the reversal. So if it didn't keep going up and it turned around and you'd knock you out from here to here, and you'd have made, on that transaction, you'd have made 1,670 points. And how much did you risk to do it? Remember, how much
$10,
did you
man.
risk?
$10. I'm heading for $10.
No, but how much points did you risk? Because remember, there was 300
600 and
points.
something.
It was 300 points, right? 300 points down here.
300 points, yes.
Right, from here to down here,
Oh,
because your stop loss would be down below here, below this reversal,
yes.
right? So that's what you're risking to be able to earn this. And then when it went up to here, see, it went up and it came back down,
Yeah.
okay? You could have, once it reverses here, you move your profit, your stop profit from here to here. See?
Okay.
Now you have a guaranteed locked in amount of 3,000 points, right? And you risk, how much did we risk? How many points did we risk? 300.
300.
Right. So if it's a dollar per point, or if it's $10 per point, that's $3,000 that we risk. And now we're up 3,000 points times $10. How much is that?
30.
Yeah. Right. And then let's look at the next reversal up here. See the next reversal? So you move it up to here now. Okay. And then this is what you'd have gained, 5,057 points.
Okay.
And how much did we risk in the beginning?
300.
Yep.
Okay.
So
Good.
and the chances of it going back to your entry, it's because if you enter two, like up here, once you have a reversal, you can lock in some profit. Once you have a reversal, you can lock in some profit because these 4 hours take a long time to turn. These weeklies, once you have a weekly going up, the chances of it turning back around on is very
The chances of it turning around is what?
very low,
Very
because
low. Okay.
it's a weekly, these weekly candles, this is a whole week of it going up. You understand? A whole week. So these higher time frame trades they take a longer time to develop, a much longer time to develop, and you're gonna have up and down, up and down, up and down, up and down, up and down until they finally go up. But when they go up or go down, as the case might be, because in this case this was a sell, right? And you could also catch a weekly sell as well, not just a weekly buy, right? But man, I just love these longer time frames, right? So just
So we
emphasizing
just
that.
trade until we have a big enough account to accommodate it.
So that's the key. So what we should do is that we should build up our accounts in the meantime, right? Build up our accounts in the meantime using
With the
these 1 minute,
with the 1,
5
5,
minute.
and 15-minute trades.
Right. So here we just saw that 1 minute trade. This 1 minute trade, which took, how many minutes was that? 12 minutes. And here's a couple. This is a fill in the gap, right? This is a fill in the gap. If you look here, you'll see a gap here, right? When it came down, it came down just a few minutes ago, and it created this gap, and then it bought up out of the gap. Okay, because this was already in a buy trend. So this was, when it's in a buy trend like this, yes, some reversal is imminent, but this was in a buy trend at the end of the day during this particular 4 hour session. So you could expect, whenever you see these buy stops during a 4 hour session, it's okay to take them if the overall session is a buy or a sell, as the case might be. Here is a buy. So these two, 1, 2, 3 buys. This one here was 1, 2, and then 3. Okay. But they say you caught any one. If you caught this one, you could have made, even before it pulls back, 5 points on this one. On this one, you could have made 40 points. On this one here, we could have made 20 points. That's 65 points right here. And this just started off at 341.
3 o'clock.
Right? On NAS. And of course, the same thing happened on SPX. You can get the same thing on SPX. See the trade down here on SPX, and I'm sure it's also on US 30. See, it's showing on US 30 as well. Here's down here on US 30. So the system is so amazing that it gives you the opportunity to trade these smaller time frames, right? But ideally, let me go to the 15-minute. I'm now on the 15-minute chart. The 15-minute chart is the sweet spot in this system, man. The sweet spot, right? Sweet spot in the system. Here's 1, 2. This is a broken back, but it's still good. And over here, man, it delivered an amazing 15-minute here. See, we have a fill in the gap. You could see the gap right here. You could see the gap right here. You could see another gap right here. But this gap, when you see the market selling down like this, here's how to interpret this. You start off, let's just put a vertical line right here. All right. So the market is selling down during that period, right? It's tempting to go for a sell, and you could go for a short-term sell, nothing wrong with that. But what we should do is come to the higher time frame, 1 hour. And if we look at the 1 hour time frame, we could see clearly that the 1 hour time frame is the back is green, the BS indicator is green, right? So that suggests that there's a buying environment. Let's go to the 4 hour chart and look at it. A 4 hour chart, right? The back was red, but the bottom 3 lines were green, and this is green. So this also suggests that there's a buying environment. Let's look at the weekly, daily chart, buy, right? So the daily environment is a buy. In fact, it just came off the daily, touching the daily yellow line and went up. So that's a buy, right? So we know the environment is a buy. So then if the overall environment is a buy trend, you could see clearly that it's going up. Then when we go to the 15-minute, or we'll go down to the 15-minute chart, what you should be looking for when it's coming down like this is for it to come down into the 1 hour channel, right? So if we notice this blue line here, I'm gonna shift it over. This red coming down on the 1 hour is the bunch of 15-minute candles coming down. Let me put this line back over this red. I'll go back to the 15-minute. You see that 1 hour is the bunch of 15-minute candles coming down. Okay. And let's switch it back to the 1 hour, you'll see that. But when it's on the 1 hour, you're just going to see one straight candle going down, right? Because this 1 hour is a bunch of 15 minutes together. Okay? All right. Now, here's what's happening. When it's coming down like that, yes, you could take some sells. But what you should be looking for, because the overall environment is a buy, this 15-minute coming down is setting you up for a 15-minute buy. See, it's coming down, coming down, coming down. Now, when it comes close to the 1 hour channel, that's perfect timing to take the 15-minute buy right here. You see that? So green. No, remember this was a fill in the gap. See, fill in the gap right here. So even though it didn't come down and give you a red, well, it was over here. It was right here. This one, it's right here. Okay? Right here where these red candles are. So you see, it came down, and it came down and it touched that 1 hour channel and created this gap and gave us an entry. And look at how many pips this thing delivered, man. Wow. Right? So if you then understand that, okay, so these candles are going down, it looks like the market is selling, but when we check the 1 hour time frame, the 4 hour time frame, the daily time frame, those were buys. So we'll be looking to get a buy from the 15-minute. And then if you go ahead and check to see what we would have gained off of here, if we took it down here, look at how much that is, 540 points.
Yeah.
All right. So that's the simplicity of how to interpret this. Use the 15-minute chart, that ideally, especially for those of us who are beginners here, you want to, every time you come on this, you look at the 15-minute and the 1 hour. And those two, you use those two to determine, you know, which of the which trade you should go for, right? You know, so when you come on the chart, like right now, come on the chart here, oops, right? You can see that a 15-minute just developed and it's now buying. A 15-minute developed earlier and what is a broken bar. So it came down. Let's look at the 1 hour chart and you see it came below the 1 hour channel. Came below the 1 hour channel. Did it go to the daily? No, it didn't go down that far. See, it didn't go down to the daily. But it came down close enough. It came down into the 1 hour channel, came below it, and now it's buying back up, right?
And
And
you
it's
see that
even
is an
created a 1
indicator
hour.
that it is definitely going to go back up. Once
Yes,
it
and
comes down
here's
below
another
the
thing that it
channel.
created. What is this right here? Green, red, green. What is this on the 1 hour chart?
That's going to be a buy.
Yeah, and it's just touching the top of the just activating at the top of the 1 hour channel. So we should expect to push up some more here. And this is US 30 actually that I'm on. Let me check NAS to see. Because I'm not one of the things that you should do is that you should look at all three charts to see if they are aligned. See the NAS came into the channel, but it didn't go below. SPX came down into the channel and is already bought up. In fact, SPX created a new high out of the channel. Right? So by understanding these higher time frames, what you're waiting for is for the market to come down into these channels on the higher time frames to take a lower time frame buy. In this case, the 15-minute. So right here, when it came down into here, would have been a perfect time to say, you know what, I'm going for a 15-minute buy on NAS when it came down into here. When it came down into here. And let's go back to the 15-minute chart. Now we're on the 15-minute chart. You could see at the bottom here it's green, then it's red, but then it's green and then it turned to red. So this broken back is good. That's another affirmation that this is a great opportunity because it came down into here. Let's switch this to the 30-minute. You probably see the 30-minute is perfect. Green, red, green. Okay? So it came down. Looks like the market was selling. But what we should be looking out for is for it to sell down into the 1 hour channel and then buy back up, which it did.
Okay.
All right. So that way we'd only be looking for a quick sell. We would not be looking for any long sell because the overall environment was a buy. Right. So when this came down into here, we look for this and we grab it and we ran back up. Another thing that you use to help to guide you, right, is to go to the scanner here, right? 3-in-1, right? Or the 2-in-1, 2 of 3. So right now, NAS and SPX are above the 1 minute blue line and US 30 is below. So one or two things could happen here. Either these two are going to go and turn to red, or this one here will turn to green. So we'll go to our chart. Let's look at US 30. US 30. I will go to our 1 minute chart. You could see it's very close to the blue line. In fact, it's right on it. It's right on it. So it's starting to it's moved towards the blue line. So if you look back here, you could see that it went up towards the blue line. Let's check NAS. NAS was above the blue line long before. It says SPX was above the blue line long before. So you see, both of them went up to the blue line, and then now US 30 came up to the blue line last. Sorry. US 30 came up to the blue line last. So with that, knowing that you could have taken a US 30 buy towards the blue line because NAS and SPX were already up there above the blue lines.
But aren't we advised, those of us who have small accounts, to leave US 30 alone?
Yeah, you need to avoid US 30 until you have over $2,500 on the top of it. Because US 30 is very aggressive. And you could move 1,000 points quickly, in either direction. It's very volatile. So so you want to avoid it until you build up a large enough account. Or you really understand what you're doing. Because if you understand what you're doing, you could get moves out of it, but you really have to be sure that you're certain about where the market is going.
Okay.
All right. So because these are good 1 minute buys. See, 1 minute buy, 1 minute buy, a US 30. Okay. All right. So you could jump into them and get them, but you need to be understanding why it's buying. Why is this 1 minute buy a good buy? Because when you look at the scanner, right, NAS and SPX are above the 1 minute blue line and US 30 is below it. Okay. And looking at it, this is the blue line right here. Let's go to SPX. I'm looking at SPX right now. So SPX is the watermark. You can see cross the blue line way down here. So cross the blue line long before, right? NAS, where did NAS cross the blue line? NAS crossed the blue line way down here. And then US 30 did not cross the blue line until right here. So it means that US 30 was way down here when the other two went to the blue line. So understanding that, it would be okay for you to take 1 minute buy stops towards the blue line, knowing that that is happening. All right. And then we're going to soon see this last one turn to green as US 30. Because, we're at the end of the day, so it might not have enough volume to move up above it to change that. But that's the expectation right now. Right. Now, we're also in the territory of the highest, the all-time high for these assets, right? This is the all-time high for these assets. And so, yes, they'll continue to go up, but be a little bit mindful that there's going to be some profit taking by some investors. So we should expect some sell down as it goes up, sell down as it goes up. Tomorrow morning, 9:45 a.m., we'll have news, and they might use it to pull this down. So, you bear those things in mind. But the good thing here is that we have an overall buy environment. So if they pull it down, at some point, we're going to get buys going up, going back up, buys going back up. So if it comes down, firstly, tomorrow, what I'd be looking out for is for this to come back down into the 1 hour channel. All right. I'm looking forward to bob and weave a bit and come back down somewhere close to here. Hopefully if it gets down to here, if it comes down even further below, it's even nicer. If it comes down to the 4 hour, which is a lot for them to get all the way down to here, right? For it to turn back and come all the way down to here, that would be great. But when you get a pullback, right, that's the opportunity for the buy, right? Because this is already a strong buy environment. So any pullback, it's almost like an elastic band. It's pulling back to go back up, pulling back to go back up, pulling back to go back up. Now, sometimes there can be a reversal, but it's going to take a lot of volume and some very bad news to move the market downward, right? Because the market is going up because the economy is good, the economic data is good. All of those factors are showing good signs, and the economy is buoyant, employment is high, and good, not high, but it's good. Interest rates are decent. Inflation is not out of control. So the economy is good. So therefore, because the economy is good, indices, NAS, US 30, and S&P, and gold, they have a tendency to go up. All right. When the economy is bad, people, tend to sell off equities, which are basically indices. Indices are stocks. People tend to sell them off. So you generally see them going down. Just to emphasize my point. Do you remember what happened in 2008? Do you remember what happened? Do you remember something called a subprime mortgage crash?
Yes.
Oh, that, yes. Yes, I have friends who suffered badly with that.
All right, I'm one of them.
Yes,
All right.
from what you say, yes.
All right, what date is this down here?
March 1. No, September.
Monday, September 1. Yeah.
September 1.
Remember what happened in September? That's when that's when the news came out. Look what happened to the market. You see? So this bad economic news.
An astute personal trader would have profited on that plenty.
Exactly. Now, knowing what you know right now, you'd wait for this to come down, and then when you see the reversal start, then you'll be taking a buy position. You see that?
Oh my.
Look at what happened. Anybody that took a buy position at that time, that's 15,181 points.
My God. At $10?
That's 1.5 million. 100 points.
Wow.
That's $15 million. 1,000
Oh my
points,
God.
that's $150 million.
Oh gosh.
So this is how you can become over the, and this happened over how many years that was, right? So by understanding these factors, you can better position yourself, right? Here's another dip. This one wasn't as deep as this one, but you can guess which year do you think this dip was?
11.
No, which year do you think this dip was? What was the most recent event that caused economic havoc?
COVID.
Yes,
Yeah.
right, right, right.
Mhm.
So understanding those factors, then okay, so when things like that are happening, it's gonna drive equities down. It's gonna drive equities down, man. It's gonna
Did you
drive
have
equities
data
down.
on 9/11?
No, well, this doesn't go back that far. This
Okay.
doesn't go back that far. This goes back to '03. '03 is some computers do. Mine doesn't have enough history to go back that far.
Okay.
But you'd have seen something similar. We
Yes.
could Google it. Let's try that. 2000. What year was that again? 2000.
2011.
No, yeah, okay. So 9
No,
September 11th, 2000. What year was that?
I
21.
think it's 20. I don't remember now.
2001, right?
2001. Okay.
Nice chart, right? And let's look at pictures. All right.
Wow.
Yep, here it is.
Wow. Yes.
All
Oh
right.
my goodness.
Okay. So this drop was huge, 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 huge. Terrorist attack September 11th. This was like almost not total collapse, but you could see clearly that the market went way down. All right. So understanding these factors gives us an opportunity to know how to position ourselves, right, and how to take advantage of the moves of the market. Right. So going back to our 1 minute, because that's where we're 1 minute, 5 minute, 15 minute. The 15 minute, 1 hour, 15 minutes is the best trade for you to take right now. Just to hit the nail on the head. Right? 1 minute, but let's go 15 minute. The 15 minute will give you the best bang for your buck. Right? These are 15-minute. We're coming below. Once you're below the 15-minute line, you want to hit the 1 hour channel. Once you hit the 1 hour channel, you can look for a buy coming out of it if the 1 hour is a buy. So right here, okay, when it came below and it's down here, you just simply wait for it to go into the 1 hour channel. These long wicks get into the 1 hour channel, and then you take it back up. See over here again, it came down up. Here's another one. Came down. See, it came down below the 15-minute channel, going to the 1 hour. Look at the run up. Oh man, hallelujah moment that, right? Here's another one. Here's another one. Hi.
Oh my goodness.
Right? So understanding this, once you just the 15 minutes happen almost every day. Okay? The 15-minute 1 hour. But a lot of people lose money trying to sell. Because when you see the market going down, like you're right here, you see the market look like it's selling. See? Look like it's selling. This look like the market is selling. Right? Down, 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 down. But this is not a true sell because the overall environment of the market is a buy. So if you understand that, then you would not get caught in this as a sell. Right? Let's put a line here. You would not get caught in this as a sell. Right? What you should be doing, let's go to the 1 hour. Look at the 1 hour chart. See? Where this sold down, this was a buy environment. Green, green, green on the 1 hour. So all that happened is that if you move this line, you see where it sold down and it touched the yellow line on the 1 hour chart. But on the 15-minute, let's put back this line here and go to 15-minute. But on the 15-minute, it looks like it was a big sell. See? So if you drop this down to the 5 minute, let's go down to the 5 minute, right? It even looks like it's selling even more. See? Look at that 5 minute. If you look at the 5 minute chart, right?
Mm-hmm.
You see that? Looks like a big time sell. Go to the 1 minute now. Go to the 1 minute, right? Where are we? All right. Go to the 1 minute chart. And you're most likely what you're going to end up seeing on the 1 minute chart is where that line is. Where is it? Where's my vertical line? You'll see a cell. You're gonna see yeah, right here. So you see if you're on the 1 minute, you see what are you seeing on the 1 minute? Red, green, red. A cell on the 1 minute. But when you look at the overall higher time frames of the 1 hour, 30 minute, what do they show by?
Right.
But on the 1 minute, if you're trading only 1 minute, then this will give you the impression right here that it's a sell, which it is, but it's a very short-term sell. See, it just sold from here to here and then it started turning back.
Mm-hmm.
You see that? So,
Yeah.
so when you're looking at the 1 minutes, you know, you have to kind of bear that in mind. So let's jump back to the 1 hour. All right, see? 1 hour chart, where that line is. Where's my nice line? Where's my vertical line? Oh, wow. All right, I'll find it. I'm gonna drop this. Let me go to daily. All right. Okay, good. All right. So, all right. So do it daily and then we drop down to the 1 hour. Yeah, so this right here. I was going in the wrong direction. So you see that one candle for the 1 hour, in the 1 minute, it looked like a big drop down. Are you seeing that? Right? So the red candle here is just one little push down on the 1 hour, coming down to the 1 hour channel right here. On the 15 minute, we'll put this back on this line and we'll go to the 15 minute. The 15 minutes is going to show us a nice push down and it created what's called a fill in the gap. See, right here. Okay, you could see this gap, okay, between the yellow line and the green Instagram bars right here. Right? That's a buy stop. Okay, and you see how much that ran up. You could see how much pips this gained. This move was 575 points.
Mm-hmm.
Okay.
May I
So
ask another question?
yeah, sure.
The fill in the gap situation there. I know it's for people who are a little more advanced, but isn't the fill in the gap after the fact? How do you know it before it's happening?
Yeah, it shows you. Let's go to the end of the chart. Let's see if we see one. Because when it's happening, see, when it's happening, you see the gap. See, when it's happening, see, it was selling down. You can see the gap between the yellow and the green, right?
I see. As simple as that.
Yeah,
Okay.
yeah. And then the rest of it now will show up when it's coming back up.
Okay.
Right? But then when it's
Okay.
finished like it is here, then you see this perfect, you know. But when it's happening, what you're seeing is this line on here. But sometimes, you know, it takes a while to kind of know that we should be paying attention to that stuff and looking out for it.
Okay.
All right. So whenever you see a pullback, like tomorrow, you're gonna see some pullback because the market is up, right? And everything is buying. So what we're looking for is a pullback. We want them to pull the market back. The deeper down they pull it, the more we can come back up with it.
Okay. Does it always work, or does it work in tandem with the breaking of the block?
The
Is there
breaking
a
of the block
correlation?
may or may not happen, right?
Oh, okay.
You know, it just depends on how deep down it goes.
Mm-hmm.
Okay.
Okay.
So yeah, all right. So that's the sweet part about these that there's lots of money there to be made. And now here's the nice thing about the 15 minute now. Look at this 15 minute fill in the gap, right? It came down and it started to reverse right here. Okay. Okay, so you could have taken it off the green line or the yellow line. So let's say you took it off the yellow line. Let's say you took it off the yellow line. Let's see how much money you would have to risk. How much points is that? Because your stop loss should be now down here.
48.
$48. So even if you have a $500 account, you could trade this with a 0.01 and risk $48. And how much did you make on this transaction? 349 points.
Okay. So what's a mere 40 something?
Correct. So what you have to then do is look out for the 15-minute trades and trade those. You don't have to get entangled with the 1 minute, 5 minute. Because the 1 minute, 5 minutes are scalping trades. You have to be very quick with those. But the 15-minute, 1 hour, those trades are the real deal. Those trades are better trades for us. So the 15-minute, 1 hour. So tomorrow, what you should be looking out for is that you're looking out for the 15-minute setup. You want this to come down below the 15. You want to be on the 15-minute chart, right? And you want it to come down below the channel, and you want it to come down into this 1 hour channel, right? If it comes down close to the yellow line or below into this channel, that's where you want it. And then you want it once it's below, like here was below, you can put your entry on the yellow line. So you wait for it to come back up and put you in.
Okay.
Right. So the whole idea is that wait for it to come down, right? Like here, you see it came down and it came way below. And then you could set your entry and wait for it to come back up. So that's the simplicity of it. You wait for it to come down. You wait for it tomorrow, you're gonna wait for it to come down below here. Okay? When it comes down below it, you now have a 15-minute setup. And then you put your entry on top of the yellow line. Or the green, but the yellow is the safest one. Because once it comes back above there, you know that the market is going back up. And then, well, here's the thing about it too. The deeper down it goes into the 1 hour, because when it's coming, what I do, instead of waiting for it to come back up to here, what I do is I try to get my entry inside the channel down here. So when it comes down into the 1 hour, and it's like, because when it bounces off like this bottom, and you catch it down here, right? It bounces off of here, and you catch it down here, you get a lot more. So you get a lot more out of it. Right? That's 121 points.
As opposed to if you had put it at the yellow line in the first place.
Yeah, because this is now down in the 1 hour channel. Yeah. But if you go back to the 15-minute chart, you see this is the entries way below the yellow line of the 15-minute, but it's riskier. Okay.
Okay.
Yeah. All right. But that is understanding that the market is in a buy trend. So looking at the 1 hour chart, it's in a buy trend. See green, green, green. That's all buy. If we go to the daily, that's all buy. We go to the weekly, right? That's all a buy environment. So I'm covered by a buy trend that I'm taking a 15-minute buy trade. As opposed to
another question. Here's another question.
Yeah, go ahead.
Suppose we're in maybe a minute, maybe not a minute because a minute will be too fast. Say a 5 minute. And it says sell in the 5 minutes. It says sell.
So here's the thing. Let's find a 5 minute sell. Let's go and find a 5 minute sell. Here's one.
Okay. Okay. And I'm saying, even though there's a slight buy trend, but 5 minutes tell you to sell. Okay.
You can take a quick one.
Yeah.
It's a legitimate sell, It's just that you shouldn't try to get too much out of the move.
Yes. So if you check like 30 minutes and you see that it's really a buy, you could take a quick one in the 5 minutes.
Yes, or the 1 minute.
Okay. But don't sit down, don't park there.
Don't know, because those are not going to stay for long, because the overall trend is a buy.
Okay.
Because remember, to get the pullback down, for the market to come below the 15-minute channel, it has to sell down.
Mm-hmm.
So when it's selling down, that's where you get these 1 minute and 5-minute sells.
Mm-hmm.
Because it's going down to set up the 15-minute 1 hour buy stop.
Okay.
You got that?
Yes, yes, thanks.
This was for you today, Cheryl. And
Yes,
the
it looks
others
so.
and everybody else that was here benefited and benefited from
I'm not talking to us.
from our dialogue. Right? And then of course you understand more about the scanner. And of course, we have the call outs here. USD JPY. Let's go back over to here. USDJ. Oh, one other thing I thought about sharing with you guys, right? Down here, I have one AUD USD, Euro USD, GBP USD, NZD USD, USD Chef, USD CAD, USD JPY, USD MXN, and USD ZAR. Now, instead of analyzing all of those pairs, right? All you have to do, like, look at this cell down here. Look at this cell down here, right?
Oh my goodness.
All right, this is a nice cell, right? Okay,
Mm-hmm.
all we have to do is analyze one chart, DXY. Analyze DXY. Now, DXY was
DXY is
buying.
what?
DXY is the dollar index, US dollar index,
Okay.
right? And the US dollar index is a combination of all the other pairs that are linked to the US dollar and how they behave, and they make it as one index.
Okay.
So here, right here, what is this right here? Green, red, green. What is this?
Buy.
It's a buy, right? It's a buy. And then if we check the higher time frame, let's go to the 1 hour. All right, the 1 hour is showing us a buy trend, right?
Mm-hmm.
If we go to 4 hour, is also showing us a buy trend. So DXY is in a buy trend. You could see that it's going up, right?
Yeah.
So DXY is in a buy trend. And now on the 1 minute chart, we're seeing on DXY, right? We saw a 1 minute. Where was I? Was I on the 1 hour? Why did I see a buy a while ago? That was a 1 hour buy. All right, somewhere. Let's go to the 1 minute chart. Let's go to the 1 minute chart. So 1 minute chart is showing us some cells, right? Showing us some cells on the 1 minute DXY, right? 1 minute cells. All right, let's jump up to the 5 minute, 3 minute chart is showing us a sell block. Let's go up to the 5 minute. 5 minute block just broke recently. So it's showing us that it's in a short-term sell, right? Short-term sell. So this is in a short-term sell, and we could catch some sells when it started, not right away, but when it started earlier, right? These 1 minute sells when it started up here. You see what's selling down, DXY is selling down, right? Let's go to MXN, USD MXN. Because USD is going down, guess what USD MXN is going to do? I'm going to click on it now.
Same thing.
It's going to go down.
Same thing, yes.
What do you think USD ZAR is going to do? It went down. What do you think USD JPY is going to do?
Same thing.
Yeah. What do you think USD CAD is going to do? Because all of these have USD in front of it. Now, what do you think NZD USD is going to do? It's going to buy because USD is on the back end, right? USD is on the back end. If USD is going down, on the back end it's going up. What do you think USD is going to do? It's going to go up. What do you think Euro USD is going to do?
Same thing.
Right. AUD USD.
Okay. Okay.
So you
So
could be
all of them
making,
on the front end are likely to be doing the same thing, and on the back end the same thing as well.
yeah, correct. And the back
opposite
end is going to
thing.
do the opposite. So all you have to do is to analyze DXY and understand what's happening in the world of DXY, and that influences the other currency pairs.
Okay.
And that's how you could literally trade the other currency pairs just based on what DXY is doing. I mean, it is not a mirror match, but it is pretty much a
The trend.
reflection.
Okay.
Yeah, very, 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 especially Euro USD. Right now, this is going down. Let's click Euro USD. DXY is going down. Let's click Euro USD. You're gonna see the reversal of this. Look at this.
Mm-hmm.
See this down here and then up.
Mm-hmm.
Go back to DXY. Up, down.
Okay.
Go back to Euro USD. Down, up.
Oh yes.
Right? Go back to DXY. Up, down, and then sideways. See? Euro USD. Down, up, and then sideways.
Okay.
So our life is pretty simple if you have the right information. And in our case, we have it. So, man, this means now, what this means, because look at how many pips this is on Euro USD. This is 10 pips. Okay? Right? $10 per pip, that's $100. Okay? So Euro USD, we can be trade, when we have bigger accounts, you could put in a trade on AUD USD, Euro USD, GBP USD. You could put in a trade on all of these pairs just based on what DXY is doing.
Okay.
And capitalize on the overall move. So you could end up having
That's
10
good to
different.
know.
Yes.
The box
Yeah.
shaping up
1,
to change
2,
again.
3, 4, 5, 6, 7, 8, 9 currency pairs, all linked to the US dollar.
Mm.
And all we're analyzing is just one, DXY.
That's a time saver.
Big time. Big time. Big time. Big time. Big time. So, yeah, so we're good to go. We're good to grow. We're going to make a lot of money this year, that's for sure. And, we just continue to invite people, guys, encourage people to come and participate and benefit from what we're doing. Right, come on, have people come and participate and benefit from what we're doing. Boot camp this weekend, everything is set for that in
and
Jamaica.
Gordon is here.
Yeah, it's going to be amazing.
Dr. Harry?
Yes.
Good evening. Sorry, good evening, everyone. Claudine here.
Excellent evening, Claudine.
Yes, I am sitting here and I'm listening and I'm learning as usual. But could you quickly look at Euro CDN pair for me and analyze Euro CDN Canadian, Euro Canadian.
CAD.
CAD.
Yeah.
What did I say? CDN?
Yeah. All right. All right. What time frame you want to look at?
Okay. You could look at it in the 5 minutes.
All right. Let's start the way we should. Let's start with the 1 hour. Right. You should always start with a higher time frame. Right. So you start with the 1 hour. So when you look at the 1 hour time frame, what has it been doing in the last several hours?
Yes.
Selling down.
Sell down. Mm-hmm.
Right. Right. If you look at the trend here, what did it do? Sold down, it bought up, but it sold back down. Mm-hmm. And it created what's called a low below the last low. Right? So the overall trend is still a sell trend. Okay?
Mm-hmm.
We look over to the left over here, it still has more, it could still go down even further because it came down below. This red dotted line is the price, and you could see clearly that it was way down below here before. Okay? So that means that it has space to go down even more before it reverses to come back up. Okay? All right, so the 1 hour tells you that it's in a sell trend. We could go up to the 4 hour. Let's look at the 4 hour. The 4 hour shows you that it was selling, there was a pullback, and it still sold down again. All right? If we go to the daily, 1 day, you could see that it was selling down, pull back, sell down. So it's definitely a sell trend. Right? See, it was way up here, it sold down, came back up, sold down, still selling. Right? Okay, cool. All right, now let's go to the 15-minute. Now the 15-minute, but the 50, we already know that it's pushing down, right? Right now it's below the 15-minute channel. You see that it came back up to the 15-minute channel and sold down. Okay, all right? came back up. You look at the logo as well. You know, the logo, meaning that the red arrow is here, telling the market go down. The gate went down, came back up, went down, came back up. So when it came up here, this is one, the logo is drawn out, down, up, sell, down, up, sell. This is first, second, a couple of them here, but this is, you know, a couple of them here, but this is the third one when it came to the trade line. So 1, 2, 3, 4, 5, 6. So it's done it 6 times. That it came down and went back up on the 15-minute, right? Okay. So understanding that it's below the 15-minute channel. For you to get a 15-minute trade on a sell, it needs to come above the channel and come back up to the 1-hour channel. Where's the 1-hour channel? Can you see how far the 1-hour channel is from the market price? So it needs some pullback to come up to get more momentum to sell again. So you wouldn't want to take the sell down here, okay? Because it's already sold off. It's already made the move on the 15-minute. See, it came down from up here, sold down. It was trying to come back up, came up here and sold down again, okay? So what you need to wait on is for it to pull back and come above the channel and get to a sell. Or you can go down to your 5-minute. Let's go down to the 5-minute to see what's going on. All right, see, it went sideways on the 5-minute. You see, it's trying to sell, but it's not having any success selling. See, came down, came down, came down, you know? So it's been going up and down, up and down, up and down most of the day. Go to the 1-minute, right? You can see it tried to buy on the 1-minute, get a little buy, but it didn't buy it. No big time buy, but it tried to buy and it sold on because of the overall selling pressure. So it's trying to reverse to come back up, right? So that's where this is. It's gonna be a little difficult to get because it's sold on some more, right? You know, so it's gonna be a little difficult to get a buy out of the 1-minute, right? You know, if I were trying to do any trades with this right now, what I'd do is wait for this to come back above here, come back either into this channel or above the channel and take it down. That's what I would do with it.
Okay.
All right, and then, you know, because it could, if it closes below this wick, if it goes down here and closes below this wick, you can expect it to push down some more. All right, but if it reverses here, if it comes here, stops somewhere in here and turns back around, then the market is trying to come back up, pull back up a bit to sell down some more.
Okay.
I hope that's helpful.
Yes, yes, yes. Yes, it's a pair that I was watching since yesterday. So
okay, do you have a position open on it?
No, not at the moment. It's actually closed. It's actually filled.
Okay.
Yeah.
All right.
Yeah.
All right. So the overall trend is a sell, but if you're gonna try to take another sell, you need to wait for a pullback. Okay. And can you see try to sell down and it's pulling back? You see that? Right? See? It pulled down and it pulled back up. Right? So it's, you know, it's not a clean run down.
Yeah.
Right? But it's trying to go down. It's trying to go down. It's trying to go down. But it still didn't go down. This is the lowest point here. Right? It came down. Let's see, put a line here. Right? And this happened on Tuesday, 10:42 a.m. That's this morning. Right? Where it sold down to here. And then it stayed sideways for the rest of the day. And then it's now trying to go down again, but it still didn't go down to the lowest point. And it's now starting to reverse.
Yeah.
Right. So it would be a little bit tricky to try to get a sell, even though the 1-minute may show you a sell with this type of environment. When it's trying to reverse, it's very dicey. But if you wait for it to come back above the 15-minute and it comes above the 15-minute up here, and especially if it comes up and touches this, and you go to the 1-hour chart, let's go to the 1-hour chart. If it comes up and touches this yellow line, you're in business.
Okay.
All right. If it comes up and touches or comes inside of this channel, that's a sweet place to take a sell.
Okay.
If it worse yet, or better yet, it comes up to this 4 hour, and come up here,
Mhm.
it's like a shower.
Mm.
Okay. So
Okay.
understanding that those factors, that's how you decide, where to take your sell or your buy from, right?
Mhm.
Depending on what's happening in the market on an overall basis. Okay. All right.
Oh, okay. Yeah, man. Thank you.
Yeah, you're welcome. Hopefully it helped you.
Yeah, definitely. Mhm.
All right. See, it's pushing back up. So if you had jumped into if you had right here, there was no clear 1 minute sell. And let's go to the 3 minute. Let's go to the 3 minute. Right? There was a broken back on the 3 minute when it came above here and it came back down. And then that was a 5 minute sell. See? It was a 5 minute red, green, red. So on the 5 minute
Mhm.
was a nice little sell. But as I said, it's a little bit tricky, right? Because it's taking it off the 15-minute yellow line here as a 5 minute sell coming down. Yes, you could try that, but can be a little tricky,
Mhm.
right? Because the fact that it was selling like all this coming down when it's already
Mhm.
sold off so much, I don't like to get into the sells when there's already been such a long sell.
Yeah.
All right, because I'm
Mhm.
catching the tail end of it, and the market may be ready to reverse and go back up.
Mhm.
Okay,
Mm.
Dr.
Oh,
Copeland, I see you unmuted.
Yes, yeah. I got two lovely takeaway from this afternoon's demo that we should really do the technical analysis on the higher time frame. And you are recommending for us the 1 hour and then look at the 15 minutes. Because except you scalp, and you can afford the screen time, those other the 5 minute and the 1 minute, you can't blink, so to speak, with those. And the other thing, Doc, a reminder about the DXY, how it is trending really mirrors what's happening with many of the US papers. Thank you.
I'm glad you got those, Doc, because DXY saves you a lot of time, and you can go and trade 9 different peers. Just understanding DXY only. So yeah,
Yes.
and then go for those 15-minute trades, man. That's where the money
Yes.
is. It's
That's
15 minutes.
where the money
Mhm.
is.
Mhm. They
Yes.
take a
Thanks,
little
Doc.
longer to develop. They take hours to develop sometimes. But when they finally come down below the 15-minute channel and you come down into that 1 hour channel, like tomorrow morning, the US news is 9:45 a.m. So 9:45 a.m., hopefully they use that to push the market down. And once you see it come down and in that 1 hour channel, then you
It will
can put your entry
reverse. Yeah.
anywhere above that, up towards the, better yet, on the 15-minute yellow line. Once it's come down below,
Expect
and
it to
then wait for it to
reverse.
come back up and
Yes.
put you in and run the market back up.
Yes. Thanks, Doc.
You're welcome. All right, everybody, we're over the time. Don't want to keep you guys long. All right, market opens in 50 minutes. All right, let's make some great money this year, man. This money is the year to make a lot of money. Love you all.
All right. Bye-bye, Doc. Thank you.
You're welcome.
thank you.